What is up, everybody? I hope your week is off to a great start. Today is Tuesday. I normally try to shoot my trading videos on Mondays, but I got a little bit busy with some other obligations yesterday. So, hey, we'll do our premium plundering on Tuesday this week. Before we dive in, if you're trying to learn to trade the options wheel strategy or if you're looking for the best stocks, make sure to subscribe to our channel, like this video. We're releasing these live trading videos, constantly showing you how to use our tools. It should be super helpful. The first thing I got for you guys today is I actually had an assignment last week on a cash secured put I had open. And this is probably going to be a pretty good instruction on the mechanics of how the options wheel strategy actually works. If you're new to the wheel strategy, you haven't been trading it long, this one's going to be pretty helpful. So I'll go in, in my automated campaign tracking. The first thing I want to do is I want to show you this position that I had open, the campaign that I had going. So I had written a $69 strike cash secured put that expired Friday on SQ. The current price of that stock is $65.75, so it obviously went below my $69 strike price. So I ended up getting assigned. So I've got 100 shares of SQ cost basis. On average I paid $69 for each share. So the wheel campaign, once you open up a campaign and you get assigned, the next thing you need to do is you need to write a cash secured put. So personally, I like to write my cash secured puts at whatever my cost basis is. But if there is a particular symbol that you want to be in longer, if there's a stock you just believe in, or if you're more of a buy and hold type, the way you're executing the wheel strategy, it's kind of up to you. There's nuance to the way that each person does it. Me personally, I like to write my strike prices for my covered calls at my basis. So, so far I'm off to a pretty good start in terms of, what this campaign looks like. If you look at what I have what Morningstar has the fair value of SQ at, it's actually $90. So even though it's trading at $65, $66, still well below what Morningstar says that this stock is actually worth. So I want to find the highest premium covered call that I possibly can. Take to the option scanner to do that. I got a bunch of junk in here earlier that I was looking at. Easiest way to do this is just go ahead and reset the form. Always show the advanced filters. So let's take the watch list off. We want to look at calls only, and we want to isolate this specifically to one symbol. So let's just look at SQ, and I want to look at a strike price range, only $69, my basis. I hit scan, right? And I've got a couple of really interesting positions or interesting covered calls that I can take to keep this campaign going. The goal of every campaign that you're running is to make sure that you continue to manage your risk appropriately, but maximize the premiums that you have in that campaign. At some point, continuing to run a campaign indefinitely when the premiums are shrinking, might not make as much sense, because if you can close that campaign and free up that capital, you can likely earn higher returns elsewhere. In this case, the most logical position for me to write of this covered call would be an expiration of this Friday, October the 4th, a couple days from now. I mean, that's less than 0.5% return, but keep in mind there's only something you're going to have open for a few days, and the annualized return compounded is 64%. So I went ahead and sold this position. I'm going to show you how to manually enter this. Now, I don't always do manual entry. I usually export from my broker and import to the automated campaign tracker, just because I don't want to do all the labor-intensive process of tracking all my trades. But I think it's important to show you guys just how this actually works and how it looks when you track your campaign in our system. So jumping back over to this position in my account, or this campaign, all right, and I want to add another transaction to this. So I can go ahead and hit edit. I can add an entry, and this was yesterday that I opened this, so it was still in September. And again, you don't have to do manual entry. It's really nice. Say it was a sell to open, one with an expiration of the 4th. Instrument was a call. Strike was 69, and the price, or the premium that I received for this position, was 0.29, 29 bucks. 939 is not going to work. That's not a real date, huh? Man, I really fat fingered some of these dates in here, didn't I? think this kind of goes to show the weakness of trying to track all your campaigns manually in a spreadsheet. The automated campaign tracker helps quite a bit with that. Okay, so you can see here. So let's look at the life cycle of this campaign. On the 19th of September, I wrote a cash secured put. September 27th expiration, $69. Just short of $144 in total premium. I got assigned. Price went below $69. You can see that's the mechanics of this assignment here. And then I turned around, I wrote a covered call at the same basis. It's another $29. So far, cumulative on this campaign, I've gained just short of $173. That's 3% actual return on my open risk, 83% annualized if you were to compound it. It's been open for 15 days. Now, I already showed you that the current price of this stock is significantly below $69 right now. I shouldn't say significantly below. I guess it just depends on how far below, but it is below, certainly below. It's 65, trading at 65 right now. So you can see that in this automated campaign tracker, I'm not accounting for the gap between what my cost basis was and what the current price is, or I'm not accounting for the difference in mark-to-market pricing. What I'm trying to show here is just the amount of premium that I've gained so far and what my actual gains are. And this is money that's, cash that's been added to my brokerage account. And the reason I'm not accounting for that, hypothetical loss is because I have no intention of selling this stock below my basis, period. I'm going to keep this campaign open until the price of the asset goes above $69 and my shares get called away, or if Morningstar updates the fair value to something that is well below what my cost basis was. At that point, when I would sell those shares, that's the only point at which I would incur a loss and the automated campaign tracker would update. So it's pretty interesting to kind of see how this works. I'll provide another update on this campaign as well in the future. But for now, I'm just going to keep wheeling the stock. I feel good about it. Like I said, I've acquired it at a price significantly below what the estimated fair value is, so we'll see how it plays out. Before I open any new positions this week, I always take a look at the CNN Fear and Greed Index. I really try to frame how aggressive I'm going to be in my trading based on where this index is at for the moment. And since we're into the greed phase, I'm going to be more cautious, right? Be fearful when others are greedy. Be greedy when others are fearful, right? Hopefully I didn't butcher that. But for now, I want to be a little bit fearful, right? We're heading up. So I'm actually going to hold some capital back in my account this week. I want to hold a little bit of cash back. If there is a pullback coming, which I don't know, I don't try to time the market. I don't look for, the perfect entry and exit. I just try to manage my risk in such a way that I'm prepared if and when it does happen. And there's people that might advise a different approach to that, right? There's other people who trade the wheel that say, hey, like holding some cash back is not worth the opportunity cost if you were to continue to run wheel campaigns during this period if we have an extended period of growth. But that's not the way I do it. Again, there is nuance to the way that different people run the wheel strategy. For me, my brokerage account actually pays interest on the cash I hold in there. It's not huge, but it does kind of make up for the opportunity cost of just holding on. And I'm going to hold, a small percentage of my portfolio back in cash. But that being said, I do have an opportunity. I do have a little bit of free cash to open up another wheel campaign as well. So let's jump back over to the scanner. Let's reset this thing back to the beginning. Okay, and if I don't put anything here in the expirations, it's going to automatically look at like the next 6 months out. I always try to limit to popular wheel, discount to fair value, 1 star or above. I like actual returns of 2%. I like to open my positions through puts only. And then I'm going to enter a max delta of 0.3. If you've watched these videos, if you've been following along, that during periods where I might be a little bit more aggressive with my portfolio, I may put that max delta of 0.4, right? But for this, I'm going to point it at 0.3, market cap 9 billion plus. I'm looking for large and mega cap only. And then I want to make sure I've got everything set the way that I want it. Oh, I want no earnings. I just want to be conservative, just more conservative than I typically would be. Okay, let's strike price range. Let's go max strike of $30 for now. I don't have enough cash free plus what I'm holding back to open up a new campaign with 5% of my portfolio like I normally would. All right. So I've got a lot of this results from LI that are showing up. I mean, this one, it just loves obviously here. But if I jump back over to, my account as is, you can see that I've already got 3,900 in open risk. I never want to put more than 5% of my portfolio into any symbol at any given point in time. Right? Again, that's a personal preference. That's the way that I manage this. So I cannot open up another one of these cash secured puts without having more than 5% of my portfolio value in open risk on this particular symbol. So I want to exclude it from there. So if I go ahead and hit here, there you go. Now I'm getting clean results. If I were to hit this hide button, remember that hides it indefinitely from every scan moving forward. So just exclude it unless you really want to get rid of it. So I've got some, other really strong positions here. This APA, energy, 2.5% actual return. Hold it for a couple weeks. You're going to have it open through XDiv. Annualized return is 46% compounded. Delta is below the 0.3 threshold. I think a couple of things that do concern me here is the IV percentile is very high. 97% of the days over the previous calendar year, the implied volatility has been lower than it is right now. That's high for that symbol. Okay, just something to keep in mind. Is that influenced by the upcoming dividend? I'm not really sure. I can also tell you that this Warner Brothers Discovery, I've been wearing this one out lately. Morningstar has the fair value of Warner Brothers Discovery at $17, and currently it's trading for $8.19. So the discount to fair value here is huge. I mean, 56% discount to fair value. IV percentile is really low. It's an affordable stock at $7.50, so I'm almost able to add more risk to it each week. And so I've really been wearing this one out. This is a position that you saw me open last week, and I opened another campaign, or I added more risk to it this week as well. Again, anytime you can look at earning 2.5% a month, with just a really deep discount to fair value, less volatile than it typically is, do that consistently over a year. The wheel strategy, it's not a get rich quick scheme. We're not looking at like 30, 40, 50, just fantastical returns that may never be realized, that more than likely won't be realized. We're looking for consistent, like how do you get 1.5, 2, 2.5, 3% every single month? And that's what this tool is helping you do. Right? The option scanner's helping me set up my risk to scan for only the things that I want to look at, limit by my watch list, and really show me these really profitable positions. And I'll show you what my Warner Brothers Discovery campaign looks like currently. So you can see, I've been adding risk to it periodically, and I'm going to open up that other position as well. So you're going to see me add risk to it as well. So just again, in I think all the past videos, I've been able to do 3 new campaigns open this week, right? We're a little bit more into greed. I just want to be a little bit more conservative. But if you watched last video, let's check in on the status of those campaigns. So the first thing that you saw me open was a position on Snapchat, and I will show you what happened with it. So I had already had some risk on Snapchat. You can see my average risk here was up. I sold a cash secured put when we shot the video. Expires October the 18th. Strike $9.50, $22 in premium for $1,200 open risk. I actually ended up buying that back. I wanted to free up a little bit more cash again, just because I wanted to be more conservative. So I bought back the contract for $14. So all told, I had it open for about a week. My return was, not great, but it was, I guess about $7, $8 for the week. So it wasn't bad, but I did have other risk here, and I did want to free up that cash to do some other things. Okay. The second position that I opened up last week was, again, on Warner Brothers Discovery, shocker. I had sold a cash secured put, again, expired on October the 18th, $7.50 strike price, $15, and then I ended up selling another one on top of it a couple days later for another $14. These are still open, okay? So I have one with an expiration at a $7.50 strike on October the 18th, another one on November the 1st, again at a $7.50 strike, good returns on both of them, as I showed you in the option scanner. And I can look at what it's currently trading at right now. Remember my strike is at 750. It's trading at 817. Like, as long as this holds, we're going to be good on these campaigns. So that's just a quick update there, and I'll continue to provide updates as long as that campaign is open. And then the third one, the campaign itself is actually closed now, so I have to dive into my closed campaigns to show you the results of it. It was JD, and if I express a little bit of trepidation about this. I've had success with JD in the past, but it is a foreign company. I don't know as much about it. I'm not probably willing to just right out of the gate with a company I don't understand as well, just say like, hey, dump 5% of my portfolio value into this. But I did, open 5,600 in risk. I sold to open 2 of these at 135. Yep, $136 premium, 2 contracts at a strike price of $28. If you look at JD's chart, it went just meteoric all of a sudden. I'll show you what happened right after I sold this. So, I mean, I sold this and it just like went through the roof right away. I mean, we're really, really far away from the moving average at this point. Currently trading at 42. Remember, my puts were at $28. So I ended up moving up one. I bought back the cash secured put, and I sold another one at the next strike up, which was $28.50, and got another $56 in premium, and then the stock just went crazy. I ended up buying back. I feel like in these videos recently, I'm showing you that I close all my positions early. I don't always close my positions early, but at this point, it's like, what's the use in holding for another 2 weeks, 3 weeks for $4? Like, just close it and move on. Let's just free up the capital and move on. So at this point, I bought that cash secured put back. So I was no longer short that position. It cost me $4.03, and risk went to 0. Campaign is closed. This thing was open for 7 days. I got $106 return, 3% annualized, 3% actual return, 286% annualized. Like, this was just a stellar campaign. I wish they would all play out like this. If I could get 3% return on all my transactions, only open for 7 days on all my campaigns, like I would take that 10 times out of 10. So again, a little bit shorter this week, maybe more of a primer on the mechanics of how this thing works, how the wheel strategy works, than showing you what the best current trades are. But there's opportunity out there. Head over to premiumpirates.com, sign up for a 14-day free trial. You can use all these tools yourself. Like, you don't have to sign up and pay to use these tools. Like, you try them, see how they work, learn to do the wheel strategy, improve the way you're doing the wheel strategy. If you like what we're doing, please subscribe. We're going to post all of our updates here. And if you like this video, it actually does help us get the word out quite a bit. Thank you so much for watching. And until next week, get out there and do some premium plundering and market raiding. Thanks.